Yo, what's up, guys? What's going on? What a crazy, crazy day today, right? Um, we've had two back-to-back all-time high days for BTC, and I'm gonna be honest with you guys. I'm totally blown away with a couple of the comments and people saying they're in disbelief. They can't believe what's happening, guys. I'm mental right now because that doesn't even make sense, right? We have massive fundamentals of these big corporations, these big hedge funds, countries buying Bitcoin. What do you guys, I mean, what did you guys think was going to happen? You know, what do you think? It was going to fall and drop down to like 50,000? No, it's not, right? I've explained this time and time again. Markets are moved by sentiment, and sentiments are produced by fundamentals, data, right? And then when I say fundamentals, I mean war, right? A negative CPI, right, et cetera, et cetera. We understand that for the past couple of days, the FOMC meeting yesterday, which is not interest rates, right? It's the meeting where you hear Fed officials. The majority of them said that they were looking and they are anticipating an interest rate cut. And then we look at the war situation that's been calmed down. The tariffs are not creating the chaos or the inflation that majority, including myself, we were anticipating, right? And then now we're hearing that BlackRock is accumulating and buying massive. Just yesterday, they bought, I think it was like $600 million worth of Bitcoin, right? And they continue to buy. What do you think was going to happen? So today, I want to talk about accumulation, right? On the technical side. That's the fundamental that I just spoke to you about. And now we're going to move into technicals, and I want to show you how they work when we say it's accumulating. It was pretty, and I'm going to go over a couple things, right? But it was pretty obvious that we were going to break to the top. Why? Well, because, like I said, fundamentals are bullish, right? We hear that these big guys, big players, big whales, big corporations, countries continue to buy Bitcoin. So there's massive accumulation, right? And we understand that their sentiment is that they're anticipating a interest rate cut. And data, inflation, CPI, which is next week, by the way, so be careful with that. But, the previous CPI wasn't bad. And this is all good stuff for the market. So moving on to technicals, I dropped this chart this morning, right? And I said if you're holding, if you're invested with Bitcoin, hold, right? Because big guys are buying, so hold if you're invested. It's meaning if you're investing into Bitcoin. If you're day trading, I said wait for a break on either side, right? Now, if I was going to predict the market, I would have said that the market was going to break to the top side. Why? Because the market is bullish, right? If we look at the daily, it's bullish. If we look at the 8-hour, it's bullish. If you look at the 4-hour, it's bullish. So now we understand that the market is bullish. How does accumulation work? And now I'm going to give you the hacks. Let's say right now you have no idea about fundamentals, right? You only look at technicals. Technicals, you're going to go with the trend. The trend is bullish. Okay, all right, so you'll come over here, and this is how accumulation works. When you see things like this happen, we had a previous day all-time high. I've said this countless times. The market never does this or this, right? It stops, right? It breathes and then breaks up, breathes, right? Because it needs accumulation. It needs money. It needs liquidity, right? Okay, so you would have come here and you look at this. And I'm going to show you a couple of things. Let's go into the 15-minute chart here for a quick second. And we understand this. If we already are bullish, right, and we understand that this is a phase that is called accumulation, consolidation, sideways, retard, like or artistic, like Jay likes to call it, right? We understand that the market is trying to break. And you're seeing the pattern right here, brother. Right there. You see this? Hold on. You see this? Look at these patterns. Look at these patterns, right? And then it goes for what? The ultimate liquidity. Let's draw this right here. It's showing you that it wants to break to what? To the top side, because you're seeing the price action move this direction. Then it goes for ultimate liquidation, the fake out if you want it, but it doesn't break. And then it comes up here, boom, and it just breaks. And then it stops again. See? Boom. Right? Another hack. You're using the fib. If you're using the fib, come over here. This is above the 50. I've said this in my previous Fibonacci video. It's showing you bullish sentiment. You're going to use the EMAs. Above the 200, respecting the 200, the 50 EMA, respecting this zone here, didn't break out. If you're going to be using candles, long wick, exhaustion, right? That's what it means. Exhaustion, long wick, right? I'm going to give you another hack. If you look at candles, at this point, I really draw fibs. I really draw zones just for you guys. I'm not even lying to you. When I trade, bro, I trade at this point as with minimum. Why? Because I'm already used to it. Like I can look at a can, like I would have looked at this without these zones here. I would have said this is consolidation, and I would have looked at just these candles. I would have known that this is above the 50 on the Fibonacci because I've been looking at charts for a while. But let's say right now you're looking at a candle. Okay? And then you had this happen. Okay? And you're here now. And the market is doing this. You don't need to draw Fibonacci, right? You look at this and you divide this big move here into three parts. 1, 2, and 3. If you're using the fib, this might be the 7, 9. Write this here. Oh, I'm sorry. That's not what I'm looking for. Yeah, that's actually what I'm looking for. Let me just change this here for a second. Just bear with me here, guys. This might be the 7, 9. This is the 50. And this might be the 3, 3, 2, right? Or 3, 3. If you see this, the probabilities of it breaking down are none. Almost none. It's looking to break to the top. And it might come here to get liquidity and then continue up. But if you see this sitting here for a while, like we were watching this here, look at the candle over here. Let me move focus. Look at the candle. Look at this push of this massive candle, right? And now we divide it, like I showed you here. 1, 2, and 3. We're looking at a potential. The higher probability is that it wants to go ahead and break to the top side. This video is short. I didn't want to go too crazy on it. It's a 10-minute video. But these are the little things that once Evolio approves my Discord, these are the little things that I'm going to be showing you continuously and talking about. And then obviously I want to get your input on things that you guys want to learn. And then I'll dive a little bit more specific, specifically into that study material. But guys, the signs were there. And I've had, and I still have some people telling me, oh, I'm in disbelief. I can't believe it. I mean, the signs are there, technically, fundamentally, right? They're there. So, that just shows that you have to study a little bit more. And don't feel bad, man. I know it's complicated. Trading, it's complicated, and it has a lot of moving parts, and it's a lot of things that you have to learn about. So that you can trade efficiently and have knowledge about these things. But like I just said right now, technically the signs were there, and fundamentally the signs were there. Micros were there. I mean, everything was pointing out for a breakout to the top side. I hope that I want to keep this video short, so I hope that you guys enjoyed this quick video. So it was, this is a quick video how consolidation or accumulation phase works in the market, and I hope you find it useful. And I'm looking to do this quite frequently. And on to the next time, man. All right, guys, I'll catch you guys later.